Hey traders, and welcome back to Mindfully Trading. In this video, I'm going to show you a simple trick that you can add to your trading plan and use each day to help improve your trading performance. I'm talking about time theory. This week, I made $600 in one day trading, taking 3 trades in total, 2 of which were on one Forex pair, and that is Euro CAD. This was trading both the London session and the New York session, managing my trades around these 2 sessions, anticipating market movements. In a moment, we'll jump onto the charts. I'll break down the strategy with you step by step and the key part that time theory plays. But first, just a quick shout out in case you've missed it. The waiting list is now open for the Mindset Mastery for Traders program. If you suffer with trading emotions such as FOMO, then this will definitely be for you. Full details are in the description below, including all of the links for the software that are used in this video. Please remember to like and subscribe to the channel, and let's get straight to it. Okay guys, so just before we dive onto the charts, for those of you who like to see the real trading data, here it is. Here are the 3 trades that I took on Tuesday the 1st of April. It's no April Fools. These were taken in my funded account that I have with the 5%ers. That's the Hyper Growth program. I've been trading with the 5%ers for quite a while now, and I'll talk more about those later in the video. Trade number 1 was Euro CAD. I also took a little trade here on Pound Dollar, which was a small win, and then I took a larger win on Euro CAD once again later in the day during the New York session, and we're going to break down the use of time theory in this way to add to profits right now on TradingView. So for those of you who want some clarity on time theory itself, let's start with the trading session. So the first session that opens up when the market opens is of course the Asian session. The market will open during the Australian Open, and with that it moves into the Tokyo time. I'm based here in the UK, so when I am talking about time, I'm obviously converting it to my current time, which is GMT. You've got to remember with Forex to obviously convert it to your own time zones. But for me here in the UK, the London session is running from around about 7 o'clock in the morning to 10 o'clock in the morning, keeping in mind that there is a volume surge at 8 in the morning when a lot of offices open. I prefer to go from the 7 a.m. because that's when major news tends to be released, and that's what can bring a lot of the volatility into the markets. So that is the London session, if you imagine that 7 until 10. And then later on in the day, there is the New York session, which runs from around about 1:30 GMT till around about 4 o'clock. That's the main bulk of the volume because you get the New York session crossover with the London session. Both of those countries are open and active at that time. And at 1:30 in the afternoon, is when you get a lot of the American dollar related news being released. So once again, that adds volatility to the markets. So first and foremost, when it comes to time theory, remember those 2 sessions, 7 till 10 for London, 1:30 till 4 for New York. And remember, more importantly, when those big news events are due out, which is usually 7 in the morning for London and 1:30 in the afternoon for New York. But sometimes there can be major news for the dollar being released later in the day around about 3 o'clock. So it's always good to keep an eye on a calendar of economic news just to know when they're due out. If you get a little bit confused talking about timings and different time zones, there is a useful indicator that you can use on TradingView. It's free and it's called the Sessions Indicator here. You can search for it in the Indicator tab here. And I like to use Sessions by O'Rourke's. If you add that to your chart, you can go into the settings, you can change the colors here. I've got a very light red and a light green, which represent on the inputs my London session and New York session. And you can edit the time. So because the chart is set up to New York, I've had to enter in the New York times for London, which is 2 in the morning, but that converts to 7 a.m. GMT. So it takes a little bit of thinking, but once you get it right, it can really help to simplify the process. Because then when you look at your charts, you know that this is the London session and this is the New York session. Now that we have clarity on time theory, let's look more at the exact strategy that I used. In particular, this was a failed breakout strategy that I use intraday, and that's what I used to trade Euro CAD. So step number 1 for me was on the daily time frame. This was to get an idea of the overall market for Euro CAD, and quite simply, price had been coming up. We got a little pullback here. That's a key area. And we made a high. Now the high was at this level. This is a horizontal line going back on the daily where we've reached this point and we've got this big wick rejection rejecting that. Price slid down here and then we got a big sell-off breaking below this little key level here. And now we are pulling back. So it's unclear whether we're going to just be having a pullback to resume the stronger uptrend, or whether price is reversing here for a further push lower. From this, I had jumped to the 4-hourly time frame, and I had marked some pretty key levels here because I thought that price was looking like it was turning, and I was interested in looking for a short up here. So I've got these levels drawn out that span down to a faster time frame, but they mark fair value gaps. So where we have these large drops down, you see that price was consolidating here, and then we drop down, we got more consolidation, drop down, consolidation, drop down. You get this pattern that we're in the downtrend. And then recently on the 4-hourly, we've pushed back up, we broke this little level, we got a little gap slide, and price has pushed up into this fair value gap here. And this is where my trade entry was based around on the Tuesday morning. Although price is pushing up in the most recent price action, I was aware of this fair value gap and that we may get a rejection at this level. Once I had this kind of larger perspective going on in my mind, that's when I could drop to the 15-minute time frame to see what was happening intraday. So here we are on the 15-minute time frame, and I have arranged this so that we can see the previous day's data here, the Monday, which was a very nice uptrend, and the Tuesday morning. We've got one more indicator that I'd like to add to this chart just to provide some more clarity on the strategy, and that is the previous daily high and the previous daily low. Very simple, it's just a light blue horizontal line here for the previous daily high and a dark blue horizontal line here for the previous daily low. Zooming in now, just looking at intraday price action. We opened right at the previous daily high, so price is up. And during the Asian session, we had only a slight drop down before price pushed up, breaking this high. When price breaks a key daily level outside of a major time zone, such as London or New York, it can indicate a little bit of unpredictability in those major time sessions. What do I mean? Well, during the Asian session, we got a breakout above the key daily level, price pushed up. It also broke out this fair value gap. But what was the most interesting was it didn't sustain it. So after it broke out, it very quickly came back down again to this key daily level where it consolidated for about an hour or so before it made this lovely bearish signal and dropped down. This is a really nice pattern that can show weakness in the market for a couple of reasons. Firstly, at the high here, we got a large push up, we got a bearish pin bar with a wick and a large drop down. This pattern here, you can even highlight the low of this candle at the top, and on this third candle, you can mark the high of the wick, and the second candle, the one in the middle, just drop straight down. So the first candle and the third candle don't touch. That's a fair value gap. That shows momentum. It's dropping straight down. And from there, there's this other signal here right at the key daily high. When it returns to a key daily level, you want to see it push back up. You want to see the momentum come in. It didn't happen here. It did the reverse. We got this bearish signal. We got a large red body. We got a large upper wick. Price pushed up, didn't like it, came down and pushed down. So all of these signals work together with this key daily level, together with time theory, knowing that London is about to kick off. And all of that formulated my intraday plan to go short. So just looking at the entry here on Metatrader, you can see that my first sell position was at 15561. Now, due to my busy lifestyle, I'm a full-time mother and I have 2 boys, 2 preschoolers, I don't always get to go on the charts at a perfect time. It would be lovely if I had a nice bit of time to just sit down at the charts and set my trades, and I don't. I have to do my analysis when I can and set my trades when they let me. So I got up early in the morning to do this analysis, and I actually set this just before the London session opened. And I did it for 2 reasons. Firstly, there was no major news being due out, so I knew we weren't going to get this unpredictable surge of volume. And secondly, because I have already done this analysis prior to the London session, so I thought there was a chance that the London could push up to trigger me in, and that's exactly what happened. So I set a sell order at 61. I set a large 20 pip stop, which I felt was a really nice stop because it's above this pullback, it's above this key daily level. If price pushes up there, then it's likely to just want to carry on up. Initially, I set a larger target. I was aiming for a drop just below this consolidation here. It's quite a risky target in hindsight. And this is what happened. So during the London session, we got a push up and it triggered in my entry short. There was actually another opportunity at 10 o'clock to get short as well. So all the way during London, price didn't really move, it's pulling back, and it gave multiple options for that short. Now, during the interim session period, so after London but before New York, price dropped down really nicely. And if I had not been so greedy and set a shorter target, like a 2-hour target, I would have gotten out with profit, but I didn't. And I wasn't on the charts observing this because I was busy with my boys. I knew at the New York session that I needed to do a little bit of trade management, so I actually trailed a tight 1-hour profit stop. So that meant that around about this time here, just before the New York session started, I reduced my stop all the way down to here because I wanted to see price carry on down, or I wanted to get some profit if it came up. And well, it came up. So the first trade, it stopped me out here in profit. But as it stopped me out in profit, my alert went off and I was able to observe this price action right here. Let's drop down even more so to the 5 minutes so we can see more clearly what happened. So trade number 1 made 20 pips. So that was what I was risking for the trade. So it's a nice start to the day. I made a win. And after we got that, the New York session had opened, we had the surge up, but this was quite an interesting bit of price action that happened because it pushed up, but then we got the bears coming back in, pushing price down. The main thing with the New York session is you're either going to see two things. You're going to see a continuation of the current intraday trend, which at the moment is down, or you're going to see a reversal. So the New York session might decide it wants to go the other way. Now, keeping in mind that during the London session, it didn't actually trend anywhere. It just kind of consolidated. It was only after that that we went down. And the start of New York, we pushed up. But we pushed up into this area here. So I thought, well, let's have a look at getting back in. And I used my Fibonacci retracement tool from the highs that were made during the London session. And I dropped it at the low of the current day, and that brought up the 3 areas of optimum trade entry, which is where price had pulled back to and was currently making some really interesting candlestick signals because we had some very small doji bodies with a very large upper wick that's rejecting the highs here. Once I saw that alone, I decided to set another entry for a short, which you can see here, this entry in TradingView 155478, let's call it 48. And again, I used a larger 20 pip stop, which put the stop just above all of this consolidation that was made during the London, because if we break that and we come back up to the previous daily high, once again, it's likely to keep going up. So that's a good place for a stop. And my target for this trade was a break of the lows here. In fact, my target was 15487, which was 3R, 3 times what I was risking for the trade. I was determined to get that 3 times win in there somewhere this day. So I did my technical analysis, which was based around time theory, price action, and market structure. And I set a sell limit here. I set my stop order and my take profit, set some alerts, walked away, and continued on with my day. And this is what happened. Price pushed up, it triggered me in short for this trade. I'm glad I wasn't watching the charts because as you can see, it did come up really close to my stop. It came up to 155657. That was only a couple of pips away from my stop, but luckily the spreads with the fivers are really reasonable, so my trade could stand that, and ultimately it turned and came back down in the profit and it dropped down to my target. So I managed to get my nice 3R win after all. And this just shows a little taste of how the emotions can really affect you when you are trading. If you sit and watch the charts whilst a trade is underway, sometimes you can get pretty uncomfortable when you see price coming close to your stop like that. And some of you may get out early, mess with your plan, all of that stuff where your emotions take over. It's called emotional reactivity. It's important to be aware of this, and it's what I talk about in the Mindset Mastery for Traders program. Earlier, I mentioned the 5%ers, the platform that I trade with. I am a funded trader, so I have passed their program and I trade the Hyper Growth program. They actually have a few different programs available. They do offer one for stock trading. They have High Stakes, Bootcamp, and then Hyper Growth, the one that I'm enrolled into. And the reason I like Hyper Growth so much is because it it is more of a long-term picture program. What do I mean by that? Well, you might see this big figure, and that's what got me the most interested when I looked at this program. And that is because they have an incredible scaling plan. So at the moment, I am on this level here. I am a funded trader with a $40,000 account size, but every time I hit 10% profits on my account, they will double the account size. And that goes on and on and on and on, all the way to a $4 million account size. Now, I'm not expecting to do this, next month. I believe that this is a program catered to traders who can see the bigger picture and who are happy to focus on the process and trusting the profits will follow. That's my mindset when I come to trading my funded account. I like to look at the long-term growth because I'm very happy trying to focus on my patience and taking the best trades, knowing that that will lead me to trading a $4 million account size. In the meantime, I'm still making some pretty decent profits along the way. If you want some more information about this program or any of the others that the 5%ers have, do check out their website. I have got a link below in the description. To conclude some of the points we talked about in this video today, if you don't already incorporate time theory into your trading plan, it can give you a really good advantage on the markets, especially if you are a day trader. Just being aware of the different sessions, the way they work together, and the way that major news can impact the market movements can just really help you to avoid those huge volatile moments and profits on the more predictable moments. If you've got any questions, please leave them in the comments below. Please remember to like and subscribe to the channel if you've enjoyed this video, and I'll catch you in the next one. Thanks for watching. Bye.